Hi, I hope you're all doing well. Welcome to today's video. Today I'm going to talk about the 6 stocks that I'm currently watching. So these are stocks that I'm not buying or I own. These are the 6 stocks that are highest on my watch list that I'm considering buying. Now, most of you guys know is that quite often these stocks don't actually turn out to me buying them for some reason. Maybe financially they don't perform how I want them to, or potentially they never get to the valuation that I want them to. But I know you guys like seeing what stocks I'm kind of considering at the moment. So I thought I'd share this with you guys because I know you enjoy the video series. And also, it's been a bit of a slow news week. There's not much else coming out with news wise in the stock market at the moment, so with it being the 4th of July I thought this would be a good video to put in here because I know you guys enjoy it. And as always, if you want to join the Patreon, join through the link in the description. It's only £5 a month. You get 2 exclusive videos a week on there. We're going to drop one later tonight. And very quickly, I've had some more questions about how to connect to the Discord. I covered it yesterday, so I'll try to do it even slower today. So if you do join through the Patreon and want to get on the Discord to talk to many investors and also me, I'm on there. What you need to do is when you get onto the Patreon, there's this pinned post here. It's easier to do it on a desktop. If you go on the pinned post, it says Discord. When you click continue reading, it says this link here. You click on that link where it says patrons/settings/app. If you click on that link, it will take you to this page and it says connected apps and it says access Discord roles from your creators. You need to go on there and log in through your Discord or log into your Discord through there and you'll get in. There's no handing out links. We don't hand out links. You need to connect through the Patreon through that link and you'll get on. I cannot click on there because otherwise it will show my Discord. So hopefully that's cleared a few things up. Now, getting onto these stocks, Wix, it's not one I'm watching. I just wanted to put this on here because a lot of you guys always ask me about Wix and potentially is it one to be looking at? Is it one interesting one? I think there's a lot of attractive UK dividend stocks out there at the moment. In particular, those that relate to construction, house building, renovation, obviously getting hit at the moment potentially because of a slower housing market. And Wix, I think, is coming under that category. 9 times earnings, 8% dividend yield. I can see why people are interested in it. For me, it's not one that I want to buy though. The reason why is because of that reason I just said. It's in that kind of construction space. Even though it's not kind of a house builder, it relates to a house builder. I want to be very careful not to get overexposed into that space because let's say that inflation is a lot stickier than what we think it's going to be. Let's think that interest rates don't come down as rapidly as what we think they're going to do. All of these stocks are going to be down here for a very, very long time and potentially could go even lower. And for me, I don't want to get too overexposed. I think there's massive opportunities in this space and that's why you've seen me with the likes of Brighter Developments in there. I got Forterra in there. But I'm being very careful about not getting too overexposed into this space for that sort of reason. So even though it's been asked about a lot and I do find it a very interesting stock, that's potentially why I'm not chasing that one at the moment, but I understand why people are interested in it. Getting on to the first one, and if you do want some free shares from Trading2, join through the link in the description and get a free share worth up to £100. But let's get on to the first one, and it is Realty Income. So this is on the NYSE, ticker symbol O. It came on the stock request a few weeks ago, and I'm interested. It is a stock that has performed financially very good. It picks up a 5% dividend yield. It invests in real estate in the United States, Spain, and the United Kingdom. So a few people might have gone, well, you just said don't buy any more real estate stocks or anything like that. Very true, but this is a little bit different. Obviously, it's investing into commercial properties that obviously should probably already taken, and obviously it's more diverse than just being in the United Kingdom. So that's the only little thing that's kind of a little bit different to this one. I am kind of watching this one at the moment because it is, with the pain that's going on in the macro environment at the moment, is having a 19% dip, and it's kind of near the lows of where it was back in October time. 5% dividend yield, that's what they're focused on. They're focused on paying out a dividend, and they also have a average return or annual return of 14.6%. So you think about the S&P 500, the average return is 8-9%. With this one here, the annual return would have been 14.6%. That's obviously a very good return, beating the S&P 500, and that's what I'm really interested in. They've got seem to be very good at executing with their dividend and also a share price return from the increased revenue and profitability. It's an interesting one. So I'm watching this one at the moment. I've got to say this is a little bit lower down on the list at the moment because I think I would like it to be a little bit lower than where it is right now. But I'm watching it and I need to do a bit more research on it. Next one is XP Factory. So this is ticker symbol XPF, and this share price has really been killed off since its IPO, and it is now sitting around 19p. It has had a rally though since 2020. So you can look at it both ways. If you bought in this time frame, you're probably up. Same as if you bought in the back end of last year, you're probably up. But many people that bought in the IPO are down massively. Now, the reason why is because these guys operate escape rooms and bars. And obviously, when you enter the CV situation, they are not going to do very well, but obviously that's kind of gone out of the way now, and obviously people are thinking, okay, it's going to go on a little bit of recovery. And one of the bars they own is Boom Battle Bar, which they acquired to add into their escape rooms they currently own. Now, the company, or the growth of this company, has been absolutely amazing, and you can see here they really did struggle from that kind of CV situation, even though it was making the Boom Battle acquisition and open more and more escape rooms, and now it's finally getting the benefit from that. And you can see here the revenue is going very ballistic over the opening up and the acquisitions that they have made of new venues. Now, the only question is around profitability. Are they going to get to profitability? That's the big thing. And what profitability levels are they going to get to? Is this going to be a company that struggles with profitability? Something like, say, a Revolution Bars. And you can see here they've had a revenue increase, but the profitability hasn't been dragging that up. And that's the issue, that the share price hasn't performed that well for this company because they're not dragging up the profitability. And is XP Factory going to be doing something similar to that? Or is this going to be something like a leisure company, let's say a Hollywood Bowl type company, that then drags out 15% profit margins? Or obviously that would be absolutely amazing if you start going to them sort of numbers. So I'm watching this one from a longer development point of view, is like, what do they do on a profit point of view? Because that's the major thing on what the share price is going to do. If they get to a 5-10% profit margin, then this stock then starts to look a very good valuation. The issue is if they do a Revolution Bars, then it doesn't come as attractive, and that's what I'm kind of waiting for. I'm waiting for a few more financial updates if I buy this one to see if they can drag up that profitability. The next one's Warpaint. I'm really interested in this one because it pays a good dividend. It's also 33 times earnings, which isn't too bad when you look at the growth that this company has been doing and continues to do going forward, and the profit will be driven up by that, and also picking up a lovely increase in dividend going forward as well that should carry on getting hiked up. I was really interested in this one, and I wanted to get this one around 10 to 20% cheaper, and it was starting to happen, and they brought out another trading update out and it jumped up again. So maybe I should have maybe bought here, we'll see what happens. But the other reason why I'm not buying this is because I own Revolution Beauty. There's a lot of revolutions going on in this video. Revolution Beauty, and I thought I don't want to own two beauty companies in my portfolio, and I thought I prefer Warpaint because they're financially doing a lot better than Revolution Beauty. That all changed when Revolution Beauty brought out their Q1 update, and they ended up growing faster in that Q1 than Warpaint, and I'm like, well, if Revolution Beauty is going to grow faster than Warpaint, I don't want to own Warpaint because I've already got Revolution Beauty, and then that's a lot cheaper valuation. That should do really good if that does the levels of what Warpaint's been growing or even faster. So that's where I'm kind of at with the likes of Warpaint and Revolution Beauty, is that I'm looking at these two companies at the moment, and I was more attractive to Warpaint, and now with the update that Revolution Beauty bought out, I don't know if I want to buy this one anymore. So once again, I'm in a waiting game now with Revolution Beauty to see if they can carry on growing at the rates that Warpaint is. Next one, Enphase. So I'm watching this one because I think renewable energy will be massive in the next few years, and Enphase are obviously one of the market leaders in that space with really good amounts of profitability. Recently though, the share prices have been taking a dive. It's lost 50% of its value, and that came off the recent earnings, or it has been building up over the last kind of couple of earnings. It seems like there's been a massive boom with the whole energy crisis situation, and now there's a little bit of a slowdown going on in this space, and it's the question of, has there been demand pull forward? Has Enphase just gone through like the online retailer boom during the CV times? Has there been so much demand pull forward, there's a slowdown going on now, and when you look at the guidance, there's a big range of guidance given, and that's what it's kind of looking like. So that's what I'm looking at. I really like Enphase, and I think it will be a massive company in the next few years, but I'm also trying to weigh up, has there been a lot of demand pull forward, and if there's been demand pull forward, will we see the share price go lower and lower if they're cutting the guidance more and more? So that's what I'm looking out for Enphase. I'm looking for a few more quarters to tell me what's kind of going on there, and I don't want to be catching a falling knife quite early on. So I'm watching this one, and I'll have a lot more better update when the earnings come out in the next few weeks. The only issue that I'm worried about is that they come out with strong numbers and then I miss the opportunity because the share price starts rallying. The next one is BATs, or British American Tobacco. So these guys obviously sell cigarettes, tobacco, and they have moved from that sort of product now and focusing a lot more on the likes of vapes, for example. And that is where the company's trying to drive the growth going forward. And there've always been that ethical concerns, and that's probably why it's always traded at a lower multiple, because of those people don't want to buy these sort of stocks. But then if this company starts moving away from this space and then moves into the kind of the vape space, do those ethical concerns then move away from the company, and then does it trade at a bit more of a premium, is what I'm thinking. And also you're picking up at 8.4% dividend yield. And if you look inside the company at the moment, they seem to be making all the right moves where the combustibles are starting to offer them growth. They are moving to a point of view where the profitability as well and the cost cutting has been really helped. And you can see here the analysts are forecasting 6.6 billion in revenue, 8.2 billion in profit, 8.2 billion in profit, 8.6 billion in profit. So if you've got a company that's growing nicely on revenue and profitability and is sitting at a 9 times earnings, and obviously that's going to be dropping, and also the fact is that they also pay a dividend yield that is very, very high. You know, you're getting nearly the average return in the S&P 500 guaranteed there. You're looking at that one thinking, well, do the ethical concerns move away from it? It offers revenue growth, it offers a good amounts of profit growth, and then you're picking it up at a 8% dividend yield. You're getting the S&P return right there. You're thinking that is a really attractive valuation. Now, the only thing that's been stopping me from buying this is obviously I own Supreme, which obviously is another company that's in the vaping space, and I don't know if I want to have 2 vaping companies because of the risk of regulation, and potentially could that affect them. That could potentially something that does go on there, and that's something that I'm being a little bit cautious of. That's the only thing that's holding me off here. But I'm looking to the risk to reward here, and I think, you know what, let's just say the share price does nothing. Let's say the share price does nothing for 5 years. Even if the revenue grows, even if the profit grows and the share price does nothing, it's still an 8% dividend yield, which probably will carry, if they carry on hiking up that profitability, you're probably going to be 9, probably 10% dividend yield by the next kind of 5 years-ish as they carry on hiking it up. 10% dividend yield with no share price return, I think that's still okay, isn't it? So I'm really considering this one. The only thing I'm weighing up is the risk of having 2 vaping stocks in the portfolio. And the last one is Barclays. I have no idea why I've not clicked on the stock chart here, but Barclays, I don't know why it never shows up on Google. So I am looking at potentially picking up some Barclays, and not the US listing. I'm trying to pick up the UK listing. Let's get that sorted out. BAC.L. I'm looking at potentially picking up some Barclays. Whoa, I've got a KFC advert shouting at me. So I'm thinking about getting some Barclays at the moment. The share price is having a bit of a slump. The annoying thing is that it keeps having some slump, and then when I get really thinking about buying it, then it starts rolling up. But it's a 5% dividend yield. Obviously, I think that dividend should hike up. I think that they should potentially as well do okay in the current environment. I think people are worried about bank runs, but realistically, in the current environment, they should still do okay, I feel like. And tied that with also Bank of America. I'm looking at Bank of America, and they're a similar bank at the moment that's having a lot of pain on the share price, down 18%, 8%, 8 times earnings, 3% dividend yield. But then I'm looking, well, why don't I go pick Barclays up? Barclays that is, 4 times earnings, 5 times earnings. Then obviously, more of a dividend yield. It probably makes sense to maybe pick up Barclays over Bank of America. Yeah, there just looks like there seems to be some interesting opportunities in the bank space at the moment still after the whole situation, which I'm kind of watching at the moment. So yeah, this is one that I am a lot more tempted in, is moving into a bit of a bank stock at the moment. Seems like an easy kind of dividend stock to hold at the moment, so considering that as well at the moment anyway. So hope you enjoyed the video anyway, guys, and as always, if you could hit the like button, if you're not here, subscribe. Let me know any stocks that you guys are watching at the moment. Particularly, I think the dividend stocks, especially on the UK side, look the very interesting opportunities. Thanks for watching, catch you in a bit.